Welcome to the Dealreporter Podcast. Hello, I'm Juliana Needham. This week we've seen turmoil on the stock markets and one of the biggest deals of the year hit the buffers, AbbVie's bid for Shire. While shoemaker Jimmy Choo of Sex and the City fame floated successfully this week, another London IPO was pulled, that of Aldermore. We've also heard that Virgin Money has decided to delay its IPO until after October. Here to talk a bit more about this is Sofia Cerqueira from our ECM team. Sofia, why the market volatility?
Well, there are a number of factors that combined created this choppy market we've seen in the latest weeks. Forecasted slowdown in global economic growth, the upcoming results of European bank stress tests, other issues like Ebola and the political instability, all combined, this means that FTSE 100 is trading at its lowest in a year and about 10% in the last month. Also, the volatility indexes like VIX and VDAX, they're also at their highest level since 2011. This means it's a terrible market to list, even for the healthiest company.
And so how has this impacted the IPO pipeline?
Well, we've seen that the recently listed companies, some of them like Zalando and Rocket Internet, they are trading below their issue price. The ones that did manage to come to market, they've been pricing at the bottom, and we've seen an incredible number of cancellations. Of course, Aldermore, but also SPIE, the French energy services group, that would have been the largest IPO in France. They've also abandoned plans to list.
And do you think this is just a bad week, or has the IPO market closed for good in 2014?
Well, I believe that if you need to get a deal done in 2014, the IPO window is definitely closing. Based on the regular timetable that we tend to see, you would need to launch a deal around now and start book building by the end of the month, mid-November at the latest. So with the market in the current state, it's definitely difficult to launch a deal now. But the pipeline is very strong, and we've seen Jimmy Choo has listed. They managed to price Entra, a Norwegian real estate company, priced off the bottom of its range and has traded up slightly today. And the pipeline is still very strong. Many of these names, they haven't cancelled their IPOs. They're postponing, waiting for better conditions. And if they take into account the feedback on valuation that has been given by investors, I think we still have a pretty strong pipeline for the beginning of 2015.
OK, thanks, Sofia. Now, it wasn't just the Shire AbbVie deal that's run into difficulties this week. The potential merger between fertiliser groups Yara International and CF Industries has been abandoned. Dealreporter's Nordic reporter Gustav Sandstrom joins us. Gustav, what's gone wrong here?
According to Yara, at least, the parties could seem to not agree on valuation, and in particular they had differing views on how to value the US market compared with the rest of the world. And that's based on forecasts for gas prices and urea prices in the country. This is quite important, as you know, because the merger would have given access for Yara to cheap US shale gas, which they used to produce fertilizers, and it would have boosted its position in the US market for fertilizers, which is growing quite strongly. On the other hand, of course, CF would have gained access to Yara's international distribution network, but still, it seems they had two differing opinions on valuation here.
And what do we know about the shareholders' views? Would CF's and Yara's shareholders what would they have been happy with?
Well, the starting point was a merger of equals, of course, and it seems at least some of CF shareholders were not so happy with that. They would have been happier with the premium, obviously. They have told us that they would have thought Yara would win more from the merger because CF has particularly strong profit margins and they have plans to build new plants in the US and so on. But on the other hand, Yara shareholders, at least the ones we have talked to them, have said they would have been disappointed by anything but a merger of equals because the strong points of CF, like its access to cheap shale gas and so on, would have been reflected in the share price already.
And the key question is there any chance that Yara and CF could resume talks at some point in the future?
Yara seems to think so, at least. It seemed quite optimistic as long as the parties could agree on valuation. And who knows, maybe sometime in the future that would be possible. We should also keep in mind many market watchers have been generally positive about the tie-up here. There is good industrial logic because the companies are so complementary. Yara would get the shale gas, they would get the US market, and CF, on the other hand, would get access to the rest of the global market. So who knows? And also, as far as we understand, Yara doesn't really see any other obvious merger partners. So if it would choose to grow through a merger, then CF might be its best option still.
OK, thanks, Gustav. Thanks, Sofia. And thank you for listening.